Welcome to the Commercial Property Podcast. My name is Suzi Carter. I am a chartered surveyor. I've been involved in commercial property in the UK for 30 years and I've done hundreds of commercial property deals. I'm here to be your guide through the commercial property market, whether you're an experienced investor or whether you're literally thinking about dipping your toe in the world of commercial real estate. I will be here talking to you about all kinds of things commercial real estate in the UK, and I've also got some fantastic guest experts who are joining me. So please do subscribe if you'd like to follow, and if you'd like any more help or information on commercial real estate, please do click www.suzicarter.com, which is my website, and you can find out all the ways I can help you. So stay tuned for this week's episode. Welcome back to the Commercial Property Podcast, and today I'll be talking about commercial property rents and how can you sense check a commercial rent quickly so that you can stack a deal. And obviously we've talked about yields previously, we'll talk about yields again, but this is all about commercial rents. And obviously, without wanting to state the bleeding obvious, a commercial rent is determined by what a tenant is willing to pay for it. So obviously, if you're buying a property where there is some good tenant demand, then you're going to get a higher rent in comparison with a property where there is lower tenant demand or no tenant demand, even as a worst case. And then obviously you're going to be on the back foot. It's going to be a tenant's market. They're going to be negotiating not only a lower rent, but also better lease terms. And so the very first thing to start with is kind of how much is available locally of similar types of property. Now, size is really important, as the old saying goes, because the interesting thing about different markets is that there can be lots of vacancies of a certain size of unit, but actually other sizes of unit there actually might be some great demand for. So it's really important not to be too general with your assessment of kind of supply and demand, because ultimately that's what commercial property is. Commercial rents are determined by supply and demand. If there's lots of supply and not much tenant interest, not much demand, then your rents will be lower, lease terms will be shorter and more flexible in favour of the tenant. Whereas if you have got an area where there's very few voids, lots of tenant demand, obviously the reverse is true. So going back to the size then, if there's quite a few of my clients who are operating in areas where they're buying industrial, and there's a lot of units on the market of somewhere between 7,500 and 12,000 square feet, secondary industrial space. And for that, maybe ex-MOT garages or ex-industrial units, quite often previously occupied by owner-occupiers who have either relocated or closed their businesses. And there's very, very little tenant demand for those units. And as a result, when those properties are being sold, they're being sold for quite low prices. But because my client has got some niche knowledge, and obviously niching is really important in this because you get to understand a market really well. Because they've got some niche knowledge, they know that if they subdivided that unit, then there is a sweet spot of around 1,500 to 2,500 square feet for which there is lots and lots of tenant demand, and rents almost double as a result. So size is very, very important when you're looking at comparables, because our starting point for looking at rent is comparables. You're looking at other properties that are either on the market or have been let, and looking at the terms of those, comparing them to the existing unit, to the unit that you're looking at. So that might be kind of comparing the size, the location, the configuration, the amenities, perhaps, like yard space or parking or whatever, depending on the type of property, and then working out whether the rent would be higher or lower. And obviously this is a skill that does develop the more you look at commercial property. And when you niche, you get to know this information because you understand your investing location really well. So when we're looking at comparables, we need to look at lots of different sources to work this out. So the first thing that I recommend you do is to look on the portals. So when we're looking for properties to buy, we tend to look at properties that are being sold, but actually Also looking at properties that are to let is really important, because firstly, we look at how many are there. Are there loads of properties? So, for example, some of these high streets where there's stacks and stacks of letting boards, lots of properties on the market, then we go on the portals and there are lots of these things to let. You see a lot of office space, for example, to let in certain areas at the moment, lots of retail space. And so, but looking behind the detail of that in terms of, are there certain sizes that are not letting, or are there certain sizes that are letting? So really starting to understand it. And obviously this is a skill in niching your investing strategies, is that you start to understand this stuff. Also going to the location, looking at letting boards, because they're not always on the portals. So when you're looking at the portals, look at local agents' websites too, look at LoopNet, Zoopla and Rightmove Commercial, and CoStar, obviously, if you've got that as a package, and just look at properties to let. And you can look at what they're being let for. So, look at the price per square foot, work out, for retail, you'll be looking at ITZA, or in terms of Zone A, which is a topic of a whole other podcast. And you will so even if you've got a global asking rent, you'll be trying to break it down per square foot, because on a per square foot basis, we can really start to look at comparables and compare them with the subject property. So you want to be looking at properties on the market, but also look at the detail behind it. Like, so for example, if I look at a high street and maybe I'm the property I'm looking at is off pitch and slightly off the main drag, then I'll be adjusting the rents. If there's comparable evidence, or there's lettings happening on the main drag of the high street, the prime pitch, then I'll be adjusting my rents down for more secondary and tertiary pitches. So again, some of this is just kind of skills and muscles that you need to develop. But the first wave of looking at it is just looking at these portals and websites, and just getting the flavour of what rents are on the market for. So that's kind of kills various birds with one stone. Number one is you start getting a flavour of what's happening locally. You can start analysing rents and working those through. Number two, when you speak to agents, because ultimately speaking to agents is one of the most helpful things you can do, as long as they're communicative, obviously, in terms of working out what the rent is, asking them what their view of rental value is, and also asking them for comparables. But when you call an agent and you're completely blind and you're saying, what's the rent, what's the rent free, etc., etc., quite often they won't, they'll think, oh, they're just trying to tap me up for information. Whereas if you can say, I see that this number on the high street, or this number on the industrial estate, or this office suite is on the market for this price. Do you think we're higher or lower than that? Sometimes you can eke more out of that conversation with agents. So just getting a flavour of what's happening locally. The other thing you can do is you can look at rateable values. Now, this comes with a bit of a health warning, because rateable values, obviously, the further we are away from a valuation date, the less applicable that might be. But rateable values, in the absence of any other evidence, can be quite helpful, because what a rating surveyor will do, what the valuation office will do when they're actually assessing the rates, is they'll use rental comparable evidence. And so looking at what the rateable value is, and maybe adjusting it up and down for the market, adding 10%, maybe even sometimes taking away some money, depending some rent, depending on what the market's doing, it can be a good starting point. It's not the answer, but it can give you a good ballpark. So one of the first things I do is look at the rateable value and try and work through kind of, has the market gone up? Has it gone down? I'll then look at the rateable value of that property in the context of other properties on the market and think, is it too high or too low? And it's just a really important caveat to know that the valuation office aren't always right on rents. So it's a flavour of what the rent might be. It's not the answer, but it's a good starting point. And obviously markets can change as well. So the next thing we need to look at is comparable evidence, because ultimately there's evidence of properties that are on the market, and then there's evidence of properties that have already let. And ultimately the best evidence is always going to be letting evidence of properties that have already let. So, and obviously, when you're looking at this, you need to look at the market and understand whether it's gone up or down since that evidence was established. most recent comparables are really, really helpful because obviously that's the most up-to-date evidence, but also compare size, shape, configuration, the tenant type. Sometimes I've looked at properties where I looked at property in a small market town, and I knew that there was a cafe, one of the national cafe chains would take it for a rent of £35,000 a year, but all the intel I was getting was that actually there was no other evidence, there was no other demand from national retailers other than that cafe brand. And then I'd be going a tier down to local operators, and I'd probably be looking at almost halving the rent because they couldn't afford to pay those kind of rents. So some of these more national brands can afford to pay a bit more. Not saying they will pay a bit more, but sometimes they can afford to pay a bit more. And therefore just be very careful kind of who your target tenant type is, because affordability is really key with regard to rent. If you think about what an operator has, whatever tenant they are, whether they're industrial, office, retail, pubs, whatever, they're going to have fixed costs. So their fixed costs are business rates, energy costs, staff costs, cost of goods, and all the other, wages and all the other fixed costs associated with the business. And rent is the only thing that can really flex due to negotiation. So, rather than thinking that, the rent's going to be this because this is what the evidence is, it's important to start thinking about it, that actually, what are the other fixed costs? What is the affordability for operators? And very often, more local kind of mom and pop type shops, they can afford less than some of these national brands because, you've got economies of scale of staff costs and cost of goods, etc. Whereas with local operators, they haven't got that. So, so it's really important to just take a sense check when you're looking at some of these comparables and making sure that you understand the detail. The devil is definitely in the detail in these things, but comparables are the most important thing. So obviously, if you've bought something recently of a similar type, you can look at comparable evidence you've got in a recent valuation report, and ultimately, valuation reports are one of the best ways of actually getting rental evidence and sales evidence as well, because you've got a list of comparables that a valuer might have put there. Agents can help you with that as well, but I'll talk to you about that in a minute. So comparable evidence can also be obtained from other PropTech, like Searchland has rental comparables. You've got CoStar. So CoStar will give you some letting evidence both on the subject property and neighbouring properties. You can look at the date, you can look at the sizes, you can look at the nature of the deal as well. Very, very helpful. Other PropTech like Adozo is very helpful. Adozo it comes in at cheaper than CoStar, and again has a list of comparables. Now, sometimes it's really comprehensive depending on location, and sometimes they're not. It just depends on the activity in that particular place. But
this episode is brought to you by Bond Finance Limited, your trusted partner for commercial property mortgage solutions. Are you an experienced residential property investor about to diversify into commercial property, looking for funding options? Bond Finance can help. Whether you're planning to expand, refinance, or make a major property investment, Bond Finance provides expert advice with access to a wide range of lenders, from high street to specialist. Book a free discovery session today to explore how we can tailor commercial funding solutions to your unique investment strategy. Visit www.bondfinanceltd.co.uk and take the next step in your commercial finance journey.
So you can look at various sources before you go anywhere near agents in terms of trying to work out some of this this detail behind rents. And also, when you're looking at rental evidence, it's really important that to know that rent can sometimes be a trade-off between lease terms, rent-free periods, or capital that a landlord's given to a tenant. So, for example, a tenant might pay a bit more, but the landlord gives them 12 months rent-free. Now, obviously, that kind of detail is what you need when you're looking at rental comparables, because you need to understand what incentives were being provided by a landlord to get that higher rent. So if you see an outlier in terms of rent, that could very well have happened. And the problem with that is obviously that if a valuer is valuing a property, they will want the detail of what rent-free periods were granted and what capital contributions might have been given by the landlord to the tenant, because that is going to affect the rent. And so understanding this level of detail is really important. And when you speak to commercial agents, you can get rents from them. But again, you need to be quite forensic in terms of what you're asking them in terms of, okay, so what was the rent here? What does that break back to in terms of rent per square foot? Was there any rent free given? What were the kind of lease length, the lease terms? And also then, looking at the particulars for that property, if there are any, you can look at historic particulars, or you can look on CoStar, Adozo, etc., Searchland, and you can find out the size, the configuration, because that can really determine whether tenants are willing to take the property or not, and also whether there's good tenant demand or bad tenant demand, because ultimately tenants will occupy a property that is suitable for their business. They don't want too much space. They don't want too little space. It's a little bit like Goldilocks. They just want it just right. And they will pay a bit more for units where it is just right. Because ultimately they'll, if they have to take, if say it's a retailer, they only want to trade from the ground floor, but they have to take the first and second floor as well. They're going to be paying a lower rent for the ground floor because they're not really going to use the excess space upstairs. Whereas actually, if you can right size the space for them and make it exactly right in the Goldilocks sweet spot for them, then they'll probably be willing to pay more rent per square foot because the space suits their requirements. Also, specifications important, parking, location is super important. As the old saying goes, there's only three things that are important with regard to commercial property, and that is location, location, location. And that certainly is very true for different location factors important for different tenants. So, for example, a retailer wants to be as close to prime pitch as possible, because that's where the main footfall is, and that's where that's where most of the customers are. Industrial tends to be near the workforce, near arterial roads and motorways, having a yard. Depends what kind of operation they operate. If they have artics, they need a turning circle and an access road wide enough for articulated lorries. If they or they might just need some parking, but access needs to be good. Offices, again, parking ratios are really important. Specification, whether it's got air conditioning, its energy criteria, etc., its size, its shape, whether there's a lift, whether there's nice loos, whatever else it might be. And that will depend what a tenant's going to pay. So the devil is definitely in the detail. And, when we look at rental comparables, we'll look at kind of all the different comparables, and then we'll adjust them. So, for example, that one's in a better location, so I'm going to adjust my rent per square foot down. That one has got a better specification. I'm going to adjust my rent per square foot down. And ultimately, you never really know until you actually let the property, and we'll come back to hold that thought because we're going to come back to that in a second. You never really know until you actually let the property, but it's your best guesstimate. And obviously, if there's no evidence on the subject property, which is the best evidence you can possibly have, then a valuer is going to be guessing as well. So as long as you've got plausible evidence to give a valuer, they will kind of consider it pretty carefully. But it's really important to know the difference between let deals and advertised deals, properties to let and properties that have let, because obviously the very best evidence is on the comparables that actually have let. Asking rents are marketing, let rents are reality. And so you need to understand the devil in the detail. And that kind of, that definitely brings us back to the very best evidence is on the property that you are letting. So has that property let recently? How old is the lease? Has that let recently? Can you create letting evidence? So one of my clients recently, he bought a mixed use commercial property. It had 2 retail units on the ground floor and then some flats above. Now, one of the retail units had been happily let for 5 years to a national brand. The other one was a small unit that hadn't been let and actually had been on the market for quite some time. Now, That's very easy to make an assumption in that case. It's been advertised by a local agent, but it's very easy to make an assumption in that case that that property is very, very difficult to let. But my experience shows that this is a very small unit, about kind of 1,000 square feet. And my experience shows that sometimes agents are just not interested. So they won't push, they won't market hard those types of property. Now, obviously, that's a big generalization, but sometimes that can happen. And so my advice to my client was put this particular property on Gumtree, put it on Facebook Marketplace, and he let it within 4 weeks. So actually, when he came to buy the property, because he did this while the property was being was in conveyancing to buy, by the time he'd bought the property, he'd already let the unit. And you can do that in commercial. You can do pre-lets. You can agree leases and agree rents, and then when you complete, you can just complete the lease. Lots of different ways that you can do it. You can have agreement to lease, which is basically that when you've bought the property or you've done something to the property, that the tenant will take the lease. Lots of different ways you can structure this. So, and actually, the rent per square foot was £2,000 a year higher than the valuer had valued when he got the initial valuation on the property. So he automatically could overturn some of this rental evidence. I've got another client who bought a property in auction. Again, the unit had been on the market for 12 months. I think a lot of people looking at this in auction just thought that actually it was unlettable. But what he realised, or what we quickly realised, was that actually this property had been on the market with the wrong agent. It had actually been on with a residential agent, and there's only one retail agent in that particular area that should have been letting it. So we changed agents. He gave them an incentivized fee. So if they let it quickly, they get a higher fee, and they let it within 4 weeks. Again, so don't assume something's unlettable. But you can use that to negotiate down your purchase price, obviously, saying, well, it's been on the market for 12 months. So, and I would always put prudent estimates of rent in my when I'm stacking a deal, just to make sure that that you're being prudent. And also, what works need to be done to a property is really important, because if you're buying a property that's vacant, but there's EPC works or there's repair works that need to be done, then very often a tenant might not take that property at the top rent because there's work that needs to be done. So they'll say, well, okay, well, I'll take it for £5,000 a year less because actually I'm going to need to spend 15,000 on works or whatever. Otherwise, you'll need to put that in your appraisal when you're buying the property and take that off the price, because ultimately you may not even get any tenant interest if you don't do those repair works or whatever needs to be done. So it's just really, really important to look at the detail behind these deals. But speaking to commercial agents, so speak to a commercial agent when you've actually got some idea of what properties are on the market to let at, and therefore you've got a really good flavour of that. And then rather than you pumping the agent for information, you can say, I see that one down the road is on the market at X, how do you think that compares? But remember, a sales agent is always going to be bigging up the rent. So what you need to do is you need to call around other agents locally who specialise in that type of property and just sense check everything. And ultimately, the very best evidence is on the property, and get a valuation report. Always get a valuation report. And when you're looking at a property, you might be buying a property that's to let, or even if you're buying a property that's occupied, rental demand is the most important factor you need to be looking at. So are you in a sweet spot of rental demand where actually if this property became vacant, or this vacant property, they could let really quickly? Because again, the speed to let and the amount of rental you're going to get will affect your valuation, especially now when a lot of banks are asking their valuers to value on a vacant possession basis, which means that basically a valuer will assume the property is vacant, and then they'll work out how long it will take for that property to let, and they'll deduct that from the gross rent. They'll take a net rent from that, and then they'll apply a multiplier to that net rent rather than the gross rent. So kind of rent-free periods, time to let are really, really important. So you need to understand the supply and demand for the units. You need to understand whether there's a sweet spot of size of units or location, specification that are letting quickly. Because ultimately, that's what we want. We want to buy a property where we know that if the existing tenant left, there would be some decent tenant demand at good rents, as well. Also, trends are really important. If you're buying a property where the kind of national and the international, the local trends are moving against it, then it may be that actually that property will let now, but in 5-10 years it's not going to be flavour of the month. It might be that back in the day there was high street properties which were letting really well, then a brand new shopping centre would come and be catapulted into a location, and a lot of the high street operators would just move into the shopping centre. That happened a lot. And so one day you've got this supply and demand totally in your favour, you've got a property on a high street. Next day or next year you've got a shopping centre that's come in and nabbed all the tenants and right size the space for them. So working out kind of whether the space suits the tenant, also speaking to the tenants if it's occupied, and working out whether they're happy, what the affordability is for the rent, etc. And affordability is so important with regard to rents. So and obviously what we're looking at as well is resilience of the occupier type for that property, and making sure that you're not too dependent on one like tenant pool. That is really, really important. And if you see a rent that is really high but is a historic lease, then again, you should just be, if that's an outlier compared to current rental evidence, then there should be some alarm bells which basically tell you that that might be an over-rented lease. Because, for example, let's take retail. Everything got rebased by valuers during COVID. And so if something was let pre-COVID compared to post-COVID, we very often see a big rental differential. Same with secondary offices as well. So just, again, the devil's in the detail of when those transactions were done. And the best evidence, obviously, is the most recent evidence as well. So there's lots of different ways that you can approach looking at rent. So rateable value, looking at properties on the market, looking at comparable evidence. But the devil really is in the detail in terms of the difference for the comparables to the subject property, and also kind of asking the right questions of your commercial agents as well, and really kind of working out kind of what the detail is, how long the property was void for, whether there's any side letters maybe to reduce the rent, or any rent-free periods, how long the leases were for, is it a national brand, a local brand, is it prime pitch, secondary pitch, what's the specification like? So, the devil really is in the detail. And if a property is already occupied, then speaking to the tenant in situ is really important, because are they happy? Is it affordable? It is super important. So, but I would highly recommend niching, because once you've niched a strategy in a certain location, you can just rinse and repeat. I've got clients who are now on their second, third, fourth deals in their investing locations, and they just really understand it. They're really under the skin of that investing location, and they've got not only have they got comparable evidence from their existing properties that they can use, they've had valuation reports, they've got great relationships with local agents. So it's very much kind of that first deal can be a little bit challenging. There's some hurdles to overcome, and hopefully this podcast has kind of helped you in terms of the direction of travel on that. But also, once you've done your first deal, it should become a lot easier, as long as obviously you're buying in the same location or in the same niche. So comparable evidence is of let properties much more important than those to let. But just getting a flavour of where things are in the market is really, really important. And the devil is very, very definitely in the detail. And we go through all this kind of thing when on the board. I spend a lot of time with clients working out what rent should be, what rent freeze you might be giving, whether it's prime pitch, secondary pitch, and you're looking at comparables. And I work very closely with my clients to do this. And also on the Commercial Property Academy, we do weekly deal clinics there, where I work with clients on this as well and try and stack the deals. But don't be intimidated by this, because once you get your head into this, especially if you've got the right PropTech like Searchland or Adozo or CoStar, you can really start to get under the skin. And obviously once you build relationships with commercial agents, it just gets easier as well. So don't be intimidated by the fact that you need to get this comparable evidence. Your first deal will always be the hardest, because you're obviously trying to get under the skin of exactly what things mean and exactly where the rents will be. And obviously, once you've let properties and once you've got comparable evidence and relationships in a certain investing location, life becomes so much easier. So I hope that's been useful and will help you go out and at least get a flavour of how to analyse those rents on your next deal. If I can help with anything, we will put some links below as to how I can help you. But otherwise, I look forward to seeing you next time on the Commercial Property Podcast.